Hello, everybody. I am Joe Gallimore, Director of Investment Management with Argent Bridge Advisors. Welcome back to another Cup of Joe. So stock markets continued to experience volatility these past 2 weeks. The first week of May was essentially flat for most U.S. equities, but last week saw another slide just across the board. So this brings the S&P 500 to just around minus 15% for the year as of Friday, May 13th. Now, the cause of the slide was the release of the April inflation readings. The release showed that while things didn't worsen too bad, the overall number is still very high. So now inflation is obviously the major wet blanket on this market. It's the bogey that's driving everything. When the high monthly inflation numbers are released, there's lots of volatility in the market. When there's no news coming out, it's nice and calm and flat for the week. When the Fed speaks vaguely about how it's going to respond to inflation, there's volatility again. So in the midst of this, the Fed is doing what it can to quell demand to help slow prices. Hopefully, there's an improvement in COVID worldwide, primarily in China, to help global supply meet demand for goods. And a peaceful resolution to the war in Ukraine will also help ease a lot of these inflationary pressures. Now, another invisible effect of inflation is what it does for market sentiment, which is basically people's general willingness to invest. Inflation touches every retail investor and every consumer. And so when it's high, resources are diverted away from the market. And then when inflation turns around, sentiment should improve and money flows back into stocks. So that would help the market as well. Now back to the market. We are in a period of daily volatility with sweeping drawdowns that may last several days, followed by flash recoveries of 1%, 2%, or 3%, which usually only last a day or two. And then this pattern repeats. We hope that one thing that comes out of this environment is that actively managed strategies can add a lot of value to your portfolio. In a bumpy market like this, especially after stock prices have been brought back down to earth as much as they already have, there seems to be a renewed focus on company fundamentals. How durable are your revenue streams if we're going into recession? How much debt do you have? Because that's going to matter when interest rates are higher. Is management adapting to supply chain woes or to an anticipated decrease in demand? When the broad market experiences significant drawdowns, like the one we're in, companies with good answers to these questions may often be unduly sold off in the stock price. Managers call this price discovery, and market environments such as the current one is where they do most of their shopping. So we hope this volatility results in outstanding performance for active strategies as it has during many past challenging periods. That does it for this installment of Cup of Joe. If you have any questions at all, please reach out to me or anyone on the team. Have a great day.